Welcome to FXStreet. If you like what we're talking about, you like the content we're producing, you'd like to be updated to it on a regular basis, head on over to YouTube, join our channel by hitting the subscribe button, and you can follow me individually on Twitter at JustAnalysis1. I'm really excited about talking about MATIC for a couple reasons. And the first is because of this rare point and figure pattern that has popped up on the chart. So first off, let's just do like a little rundown here if you haven't watched or read some of the other analysis we've done on it. But this rising wedge on MATIC's chart has been here since October. And the rising wedge is one of the most bearish, and I mean, as far as basic geometric flags and pennants and are concerned on charts, the wedge patterns are by far the strongest reversal setups, and they have the highest positive expectancy rates for turning into profitable setups, and they usually correct frequently, but in this case, this rising wedge of MATIC, it just has not. There's just been many breaks above the rising wedge, many of them false, and generally when you get a false break up above a rising wedge, you typically see it collapse pretty quickly. That has not happened. It just has not happened. There was some evidence of that happening, when we go back to last Friday. So that was the first close below this trend line ever in this rising wedge that I've drawn on here. So it's never dropped below that until Friday. And then another bearish event occurred on Saturday when we had the first close below the Ichimoku cloud since November 26th. So that was bearish. You had a breakdown below the lower trend line of the rising wedge, breakdown below the Ichimoku cloud. That was two double bearish events. And then you had a third bearish event because you had this kind of, at the time, it felt like it was like a false recovery because it spiked up, came up to the trend line on Sunday, but then it didn't get back into the rising wedge. It was rejected there. So that in turn had short sellers happy again because they were able to push MATIC down on Monday, and then it just moved up. Of course, you have Tuesday's candle here. That was a fairly substantial spike of 14% close, 14% higher on Tuesday. Wednesday looked like it might have been bearish because, it was trading a little bit lower, but ultimately closed just below the Kijun Sen. And then you fast forward to today. This is where we're at. So is this, the structure here, is this just a lower high that will push it down below the wedge again and below the cloud? It could, but that brings me over to this chart over here. This is the 2-cent 3-box reversal chart. That old trade idea back here. Maybe if it'll let me get rid of it. So the setup that is here, this is called a bullish shakeout. So the rules for this are that it must be the instrument must be in an uptrend, which it is. You can see the bullish trend line here. That's an uptrend. It needs to be above a bullish support level, which it is. And there must be some type of double top that's formed right here. So here's the double top, those two X's. And then from the double top, you have to have a reversal of O's that corrects and creates a sell entry, and you have to get at most, actually you have to have two, no less, no more than 2 O's below that double bottom. All right. So you have this show up here, and this creates the conditions for entry on a bullish shakeout, because the entry is not up here where you'd have a break of a triple top. It's actually right on the 3-box reversal. And so the setup on this would be a buy stop at 238, a stop down at 230, and a profit target of up at 2.68. That'd be the setup. So this is, again, the reason that this is exciting is because this is a rare setup that has a lot of rules attached to it as far as what conditions are needed and necessary in order to fulfill this type of an entry. And generally, if it does trigger, that's awesome because that has a lot of upside potential. But it is invalidated if, because technically we've got a split triple bottom breakdown here, which is kind of like that really just creates a bear trap if it hits 238. But if it moves down one more box, if it moves down to 228, then the trade is invalidated. The setup is not, it is no longer a valid trade setup. So that's what I see happening here on MATIC. As far as downside potential is concerned, definitely if this turns into a higher or a lower high that is indicating some pressure that is likely not to abate anytime soon, then we could see it dip down below the Tenkan-sen, the wedge, and the cloud and hit that 618 fib extension at 170 and perhaps even lower to 140. We'll see what happens. Thank you for watching. From all of us here at FXStreet, please don't forget to like, comment, and subscribe.